Hi, everyone. I am excited to be here. This is Live with Main Street. I am Anna, and I've got my partner in crime, Jim, and we are talking to you today about taxes. Tax season is almost done, right? We're kind of in the midst of it, and so we thought that we'd come on and chat about all kinds of things today. Welcome, Jim. How are you doing?
I'm doing great, Anna. Taxes is not my favorite subject. I just want you to know that. But
Is it true? Really?
I
Okay.
can't avoid it.
No, you can't. I think nobody has a choice about not talking about taxes. So what ideas and questions and suggestions do we have? Can we start with this one? Very simple, Jim, because I think it comes up a lot. And with the modern technology, a lot of us default to that. So the question is, should I do my taxes on my own with the help of wonderful programs such as TurboTax or H&R Block or whatever else, Credit Karma, or should I actually hire a professional? What should I do?
So you're asking me that question, Anna?
I'm asking you, yes, we can. I think what we should do this time is just kind of go back and forth and see if each of us can add a little bit of contribution to each question. Would that be good?
Yes, it is. And so here is my answer. I think most people, the majority of Americans, can do their own taxes using a vendor like TurboTax or TaxCut, or they might try something if they're a little more complicated, like I'm doing this year. CreditKarma.com contacted me because I use their services and said, we'll do your taxes for free. Now, I was a little suspicious of that, but I went online this past weekend and I did my taxes. I saw that the result was kind of ugly, but because I have some ownerships and I get some K1s and other business interests, I'm really gonna let Credit Karma go almost all the way to the finish. I'll print it out, and then I'm gonna send that and all my documentation to our CPA, who's been doing it for about 15 years now, and just see how close CreditKarma.com got for free with him reviewing it and maybe redoing it. I might save a little money with the CPA, but I'd rather have somebody professional because there's a lot of moving parts. Not everybody has as many moving parts as I do, Anna. So I think if they use TurboTax or TaxCut and actually paid for it, they might get better service from their experts that they can contact. So maybe Credit Karma as an initial pass for free and then pay for it for the majority of Americans.
Yes, I am. Unfortunately, my tax return is not as simple anymore. So if it was, check this out. Yuri is a CPA, right? So he doesn't want to do our tax return. So I wouldn't have a choice, but actually hire a professional. No, I agree that for some folks it may be just as easy to use one of those programs. It is nice that there's help that you can ask for, but I wouldn't discount the idea that hiring a professional, a tax preparer or a CPA to make sure that you actually completed it properly. Because haven't we found mistakes in the past, Jim, on tax returns?
Yes, and I don't want to miss talking about enrolled agents. Enrolled agent is someone who is authorized to appear in your behalf to the tax court. They only do income taxes. And that is a good compromise between a certified public accountant that deals mostly with businesses and business owners, right, and the corner store where they do taxes. An enrolled agent is very experienced, sophisticated, and can do more things for you. So that's another alternative, Anna.
Yeah, that's true. That's true. And also, there's a lot of organizations that have people that they train to complete your tax returns. So those are not necessarily certified public accountants, or if you are in a situation where you need help and you don't want to do it yourself, but yet you aren't prepared, to pay a higher fee to an accountant, there are those services. I think AARP has it. I'm thinking about another organization. They also actually frequently reach out to us, professionals, to see if we want to volunteer our time. So that's also an option. I guess the bottom line, you've got to make sure that you do it correctly, because you don't want to be unwinding it if there's ever an audit. So that's probably the best we've got on this question. Okay, all right. So the next logical question I think that comes up to mind is that, all right, let's talk about if we get a refund or if we have to pay. Now, let's start with the not so good news if we have to pay, right? So let's say we have a tax bill that's due. What's the best way we have in mind to pay for it? Can we use a credit card? Should we use money from a savings account? Should we take a loan from the IRS? Like, what are some thoughts do we have there?
Well, Anna, there's a couple of ways to do it on credit. Many people fall for the trap where they get a credit card with 0% interest on purchases for the next year, and that sounds pretty good. But there's two glitches there. Number one, the vendors that take the IRS payments charge a fee on top of the bill that you're paying. Secondly, most of the 0% credit cards charge a fee. I usually get a 3% fee. That's what I'm seeing these days on the promotions that I get. So you could be paying in fees 8 to 10%. And even though the credit card says 0% interest, you end up paying about 8 to 10% over the year that you think you're getting it for free. The other thing you can do, and I know that one of my credit card vendors says, here is a blank check, we'll still charge you the 3% fee and the 0% interest. So you could actually, it's sort of like a cash advance. And you could get the cash, you're paying it back on the 0% credit card, but it cost you 3%. So, and then you would have the check to pay to the IRS, which would go on your credit card, that blank check. So that circumvents the vendor fee on behalf of the IRS, but you're still paying 3% in my example to the credit card company. So there's no free lunch, even though it's 0%.
Right. But that's, if you have to do that, that's probably one option. Now, a lot of people will argue these days that, well, I can get points on my credit card, or I can get miles, right? Don't we all play that game? So even though, like, when they want to pay us our fees, credit card is a preferred choice or method of payment. All right. But, well, what if, do you have something else to add, Jim? I wanted to switch on that.
The 2% cash back credit cards. So you pay 5% to the vendor of the IRS, you get 2% back. So you're still out 3%. It's hard to get away without paying 3% for that borrowed money.
I know. Well, maybe it's still worth it, but yes, you got to do your numbers. I want to, so, all right, we've kind of figured out, all right, there's a way that hopefully we can pay off the debt that you have to the IRS for 2017 tax return. Now, what happens if you actually are lucky and you're getting a refund? What are some of the ideas we have for those folks? I guess I'll take a stab at this. As I was thinking, it is not going to happen for me this year, but if I was getting a refund, let's circle back to what you were just talking about. For those people who couldn't pay their taxes with anything other than the credit card. So if you are getting a refund and there are, for example, debts that are sitting on your books, consider paying those off or consider paying those down. So we can start with credit cards, I guess higher interest loans. Do you have a car loan that maybe needs to be thought about? And then kind of go sort of make a list and go down the list. Student loans, or how about prepaying down home equity line of credit? Interest rates are jumped up, right? So if you had a variable rate, perhaps your rates are changing as well. So think about the debt side of things that maybe you can apply that tax refund to. Now, our favorite, or my favorite topic is, how is the emergency fund doing, right? It's one of those areas that we always kind of have to drill this into our clients' heads, that even though you may have one and we've agreed that you're going to have a certain amount of money there, and maybe you took some out for whatever reasons, don't forget to replenish it. So if then there's no debts you need to worry about, maybe we can worry about replenishing the emergency fund, right? So if that's taken care of, then let's think about the longer term goals, right? Things that you're working for in the long term. So is there something that, is there an account, or is there an investment account or a savings account that you can allocate those funds so that it's serving you well into the future? Those are the kind of three main ideas I have for tax refunds. Anything you want to add, Jim?
Well, I don't know. I'm not going to drill it into anybody's head, but I might offer the suggestion that you split it, lowering debt and savings, and go half and half, but also consider maybe changing your withholding. And changing your withholding brings us to 2018 and the time we have left, Anna. Can we talk about withholding?
Yes, let's do that, because it is the reason you're getting a refund is probably because your withholdings were off, right? So you paid more taxes than you should have. Now, with the new tax brackets that we are going to have, or are already in the works for 2018, that calls for probably changing the withholdings. So what do we have in mind, Jim?
Well, let's think about increasing our retirement savings, our long-term goal. So if your paycheck, and the paychecks just went up, say your paycheck went up $20 per pay period, 2 pay periods a month, then maybe you can increase your 401k or 403b by $40. What you'll find out, though, is when you put away $40 pre-tax, your paycheck does not go down $40. It might only go down $32 because the other payroll taxes weren't affected by your pre-tax contribution. So that's my first suggestion, is increase your retirement savings, because I would like everybody to retire sooner and live longer, happier.
Yes, we were actually looking around now and we are thinking to do a bit more of a longer session, maybe even a webinar on the 2018 tax reform, right? And all the things that we have to consider. There's a lot for us to talk about. So we're going to wait until we finish everybody finishes filing, at least April 15th, filing their 2017 tax returns. But we were looking up, so TurboTax has a withholding calculator there, so you can plug in your numbers and see what you actually should have. And then I actually also checked, I'm looking right now, H&R Block has a calculator. So, but Google is your friend, so Google and see what comes up. But we want to make sure that it's those sites, right, or those calculators are referencing the new tax brackets, and so therefore it should be, at this point, or hopefully by the time you look it up, should have 2018 data. Always you can ask us a question, right? We should be able to answer this question if somebody reaches out.
And Anna, one of our clients did ask a question that we're not totally prepared to answer, but it was about becoming an independent contractor in 2018 and taking advantage of the small business 20% deduction as long as your married filing joint income is under $300,000. What's happened is the Treasury Department is behind in issuing the rules. The IRS is therefore behind in implementation, and the software publishers are way behind. So the only thing that I would say at this point in considering becoming a 1099 consultant or a non-W-2 employee is to look at the occupations that are excluded from using that 20% deduction. There's a whole bunch, Anna, including, get this, financial planners.
Oh, I know that. No luck here.
Right, and so I think most consultants are in that same boat. So yes. I would just alert people to that. It's going to be some time, and it's there is some discussion now in Washington. There's a whole bunch of bugs in the bill. It was passed, in the dead of night by only one party. And the other party is objecting to the corrections because they want to reopen the bill. Meanwhile, the top attorney at the Treasury Department has resigned, the big expert they had brought on board. So things are in flux. And I think just doing prudent things and keeping alert to permanent changes. Remember, many of the personal income tax rules are only temporary through 2025. Except for, I think it was the 529 change for K through 12 tuition for private schools. I think that was made permanent. And the corporate tax rate change from 35 to 21, that was made permanent. But most of the personal changes are only temporary. And like anything else in life, until the next Congress comes in, it might be very temporary.
Well, let's kind of dive into that, Jim, on our next webinar, or maybe 2 webinars from now, but we are going to circle back and discuss all of those interesting changes, whether they're going to be permanent or temporary. I want to thank everybody for watching. Let us know if there are any questions that are relating to the 2017 tax filing season. We're still around, and we'll see you guys and gals next month. Thanks, everyone. Bye.
Bye now.